And there it is. The markets are officially closed on this Wednesday, April 1st. Welcome, investors and traders. I'm AJ Monte. And while I don't have any April Fool's jokes for you, we do have a lot of good truths to share. And what I'm going to do is kick off with a review of last week's market report to show you how the targets have hit. Keep in mind, Nod will not be with us on this session. He's out doing charity work with the kids from his church. Very happy about that. And he'll be back early next week. So starting with the diamonds, let's get right into it. DIA is the ticker symbol for the Dow Jones Industrial Average ETF. And if you're brand new to this channel, understand that I leave my target lines on the chart so you can see how often they hit with regard to the accuracy of the charts in setting targets. And as I zoom in here, you can see these are the red diagonal lines, both up and down. And we have a very strong percentage in our hit rate. So stay tuned because I'm going to be leaning more to the downside for tomorrow coming into the holiday 3-day weekend. And therefore, I think we're going to see a lot of profit taking, especially towards the end of the day. Now, there's a lot going on tonight with President Trump is going to be addressing the nation on with regard to the war in Iran. I think a lot of good things are going to happen from there, but it could add some volatility to the oil markets, which we'll get to here in a little bit. We're going to be bringing on the Cryptex team, Matt and CJ. So you can see that right away, we hit my downside target on DIA of 452. And looking at today's candle, I'm going to give you a little sneak preview of what I'm thinking about for tomorrow. This little candle is known as a spinning top. And that spinning top is showing up right at a key roll reversal from this low back here earlier in March. If I draw straight across, you could see that that support level, once it was broken, is now most likely going to turn into resistance. And so that's what we refer to as the roll reversal. If you've been in touch with any of my educational videos, you know I point this out quite a bit. It's basically when it's a horizontal line that is drawn from a previous support, like I did here on the live chart, and it's not uncommon. In fact, almost every chart we look at, I'll be able to find a roll reversal resistance or even a roll reversal support on the way up. So keep that in mind and burn that image in your memory for future trading opportunities. But also note that today we gapped up and a little gap is formed right here, which is most likely going to act as a price magnet. So I am leaning to the downside. I don't know how far I'm going to go, but when I put out the weekly market report, it's going to be sometime around 1 or 2 o'clock in the afternoon. So you may not have much time to react to those signals unless you're right on top of the YouTube broadcast. So hit that notification bell. And as soon as I put out that video of my market report, you'll get that immediately and you'll still have time before the market closes to react to that. So that's DIA. Looking at IWM, we again hit that downside target right there on Monday. See the diagonal line. So we've been hitting since the beginning of the year. We have 100% hit rate. Now, I would love it if there were more analysts out there that have that kind of track record, and I do welcome them, and I would love to have them on the show with us, because if we can collaborate with high probability target setters, then it's going to be much better for our audience. But as of yet, I haven't met anyone that has that kind of track record that they could actually prove to the general public. And here, again, we do that with these diagonal lines. So this candle right here is a little bit different in that it has a long shadow on top of it. That's known as a shooting star. A shooting star is generally found at the end of an up leg. Here's a shooting star going back here. This is very close to a shooting star. See the long shadow on top of that candle. And this is most definitely a shooting star. So you could see, looking back at the accuracy of those shooting stars, where it definitely led the prices lower after those showed up. So again, I'm leaning to the downside on IWM as well. Another little point that I don't want to overlook, and we saw this on the diamonds, I just didn't point it out, is that today we have a drop in volume on the way up. Now that's telling us that the buyers are running out of momentum. So if you have a long position and you're trying to make a decision whether or not to take the profit or not, I would say at least protect your profit. That's what I would do. Again, we don't give advice on the show because we get booted from YouTube. But I can tell you what I would do if I had a profit in any position. I saw signals like this, I would definitely be looking to protect those profits. So IWM is most likely going to go down tomorrow and probably right up until the close tomorrow as well, maybe even into Monday. And now we look at the Qs, and what do we have? Well, we've got not quite a shooting star, but we definitely hit the downside target there on the Qs at 571. And once again, we got that drop in volume at, guess what? A roll reversal. See that low right there from March 9th. If I draw that straight across, you can see that that support level, once it was broken here, is now matching perfectly with that moving average, which will also act as resistance. So we're positioned on for the way down on the Qs. Our members have a really beautiful calendar spread that they're working that'll be rolled out next week into May when we come upon April options expiration. So if you're a member, stay tuned for that. My trade publications will definitely be going out in time for you to take advantage of those credits. Now, looking at SPY, you can see again, it's more or less the same story. This will be a shooting star as well. Gap below the market, drop in volume on the way up. The oscillators are still going up. There's no hinging or pivoting happening there. But like I said, tomorrow I think will be the day when we start to see some of those oscillators start to pivot lower. So we'll keep an eye on that. So that's the midweek review on the targets. And then tomorrow, again, as I mentioned, stay tuned for, I'll be putting the downside targets and drawing the target lines on there. So as I mentioned, I want to bring on the Cryptex guys. I'm going to bring on Matt Monte first because we want to talk a little bit about what he's seeing in the Bitcoin market. And Matt, you and I had a little conversation in the warm up, and your analysis on what you're seeing in Bitcoin and your analysis of what's happening with unrealized losses with some of these Bitcoin holders is more or less confirming what I'm seeing longer term in the general market. So, what do you have right now to report to our viewers on what you're seeing in the Bitcoin market? Go right ahead.
Yeah, well, first of all, thanks for having me on, AJ. Hello, StickyTrades family. And yeah, it's really nice when you get that confluence between the technicals and some of the more positioning data with Bitcoin. And I think that's what we're seeing here. One of the most important driving factors is unrealized profit and loss in Bitcoin. And I think that that can really dictate further price action. So, one thing I did want to highlight here today that I think is definitely worth noting is the percent of traders that are currently operating at a loss. And you can see there's some pretty serious overhang here. I have this range highlighted. These are people that bought Bitcoin above 80K and are still holding at above 80K levels. So obviously Bitcoin, trading below 70K now. So these traders are operating at a significant loss. And resolving this overhang will likely require either a meaningful price discount, so we see price fall significantly, and new traders step in and buy and bring down this average cost basis that right now is above the current price, or we see price gravitate towards that level of the average cost basis being 80K, and those traders are able to exit at a break-even price. I think it's a much more likely scenario that we see Bitcoin show some sort of meaningful price correction in the interim. I think from a technical perspective, all signs are showing that Bitcoin is looking a bit weak here. And going along with your thesis, AJ, of seeing some profit taking tomorrow, if the major indices are down tomorrow, I'd expect Bitcoin to be down. And when we see Bitcoin move, it makes pretty sharp moves. And it's been consolidating for the better part of a month now. But I think we need to prepare ourselves for that move down. So, from a technical perspective, we need to break above that moving average if we have any chance of moving up towards 75 and 80K. But I just don't see where that buy pressure is going to come from. And ultimately, I think that price is headed down, and we're going to see The short-term holder cost base has come down as a result of lower prices and people stepping in at around 65 and plausibly even 60K. So I'm preparing for the worst. I think that tomorrow we could see some pretty significant profit taking in equity markets and Bitcoin alike. And I just want to be prepared for that. So just an update on where
Yeah.
the short-term holders are positioned and kind of what I'm seeing for Bitcoin right here today.
I want to bring on CJ to talk about this pattern that I'm seeing, and I want to get his view on whether or not he's seeing the same thing. Now, CJ, I know you're very technically grounded. If I expand on this a little bit, would you see this area right here? Let me highlight this as a possible bearish flag in this area here, or do we not have enough of a flagpole? Because I know this was a flag here, and we almost got to the target low from this first bearish flag. I mean, you don't see bearish flags stacked one on top of the other too often in any, let alone Bitcoin, but in any stock. So would you agree with that, or am I overanalyzing that? I'm not the Bitcoin expert, folks. So Matt and CJ are the Cryptex team. I stick to swing trading, the equities, silver, gold, and the miners and such. But I leave the expertise on Bitcoin to these guys. What do you see there, CJ?
Yeah, I think it's important to look at relative strength or relative weakness in Bitcoin right now. And Bitcoin did underperform the equity market in terms of positive gains over the last 2 weeks. So if I would want to be long any risk asset right now, which quite frankly I don't, because we still do have gaps to the downside, I would prefer to be long something like the S&P as opposed to
Right.
Bitcoin. We are still in a macro downtrend, making lower lows and lower highs. While we do have some gap fill targets to the upside, nothing I'm super crazy about longing here.
Yeah. Hey, Matt, when you pulled up that report, what was the average cost basis? You saying around 80,000? Is that right?
Yeah, just below 87, just
All right.
below 80,000.
80,000, because this is very interesting. Remember, folks, I just brought up the role reversal on the Dow before, and if I take that 80,000 level and I look at the support level, which is right around there, you see what's happening here. Let me try to draw that straight across. That's not too bad. I didn't have that much coffee today, so that's why that worked. But you see how resistance was broken here, and it even gapped up over that resistance, only to come back as fairly strong support, tested support again. And then look at that. Interestingly enough, it gapped down below the support level. And now we have that reversing its role once again as resistance. So if you're looking at 80,000, then in the industry, we call that overhead resistance. And think about this, folks. If you had a position in Bitcoin and your cost basis is 80,000, here it is trading below 70,000, right around 68,000. And you're scratching your head going, oh man, I'm not really bullish anymore. But I got to hold it to get back to the break even. At least I'll get to break even, and then I'll sell it. Well, that's actually the whole psychology of the market. The market in general, especially for the amateur traders and investors, they're not looking at that point to pursue a profit. They're just looking to get out at break even. So that 80,000 level is going to be that overhead resistance that I'm talking about. And then we have that more or less capitulation. And what happens? The unrealized losses are now realized losses. They get out. The selling action pushes prices lower to maybe another new role reversal support level down here. And then new buyers come in. And like Matt and CJ mentioned, the lower cost basis is now established with the next generation of Bitcoin holders coming in at those levels. So that's the way I'm reading the chart and more or less translating it to what you said, Monty, on the
Yes.
report. And yeah, I would say, yeah, we could see it around 65,000 to retest this support from back here in July of 2024. I mean, that's a real possibility right there, for sure. Okay, so CJ, I want to bring you back and talk a little bit about what you have been looking at with a 3-point checklist that you're using to more or less find short-term bottoms. Why don't you explain that to our audience, and then we could more or less tag that onto the 7-point algorithm as well. Tell everyone about what you've been using here with regard to your analysis of the markets.
Yeah, so I'd love to bring up my chart here. This is a 3-point trading checklist that is designed to identify significant panic within the equity market and mark local bottoms in the S&P 500. We did talk about this extensively yesterday in our member webinar insider series. So I just want to go back and reiterate some of the key points. And then we'll show you some historic examples of as well as when this thing has been pretty accurate. So the first point in the trading checklist is the VIX going above 30. That's this green line, and then coming back down and stabilizing. As you can see, we've had that in the last week, and we had some really bullish price action yesterday to kind of validate that. The second point in terms of the 3-point trading checklist is, are we measuring backwardation in the futures market? So what that means is when VIX futures front month contracts are trading at a premium to the 3-month contracts, that's indicative of very strong panic and hedging by institutions because they're slamming the buy button on the front month as opposed to the 3rd month because the front month has the most liquidity. We saw that backwardation and that premium form earlier last week. Now it is stabilized as well, and we've seen that panic a little bit subside. So we have 2 of 2. Now the third point is the equity put call ratio down here. As you can see, once that equity put call ratio goes above 1 and comes back down and stabilizes, that is indicative of large institutions as well as individual traders buying a lot of puts for protection. So over the last week before today's price action, we did see 3 out of 3 of those checkpoints lining up, and that really gives me kind of a highlight of an idea generation of like, okay, now it's showing a potential bounce. Let's look at the 7-point trading checklist to see if that also confirms. Now, to just go through a couple historic examples briefly, the last time we saw this 3-point checklist really line up was the April lows. We had the VIX really spiking. We had that backwardation in the futures market, and the equity put call ratio came down and stabilized. The previous time we saw this as well was during the yen unwind. We had a very clear indication of backwardation in those 3-point checklists. We're hitting up as well. Now, if I had to compare a previous time in history where this 3-point checklist looks the most familiar or similar to me, I would say it would be in early to mid 2022. We had the Ukraine war. We had oil rallying very strongly at that time as well. And this was where we saw a local bottom in the S&P 500 in late March. We had our rally up into a lower high, and then the downtrend resumed. But check it out once more. We had the VIX going above 30 in this level, then it stabilized. We had a VIX futures premium and backwardation, that then stabilized. And we had the equity put call ratio really spiking and then stabilizing. I don't necessarily think that the market is about to rally to new all-time highs. I think there are very strong structural components like oil prices that still have to be, we still have to see those ramifications. But maybe a little bit of profit taking tomorrow, but I would look for price to rally into some type of lower high before we maybe resume this macro downtrend. Last thing I'll point to in terms of market structure is clearly earlier in the week, we had one of the strongest days. I believe the S&P 500 was up around 3.5%. And that's when, we created gaps, but then came down and filled those gaps and created a higher low. So I would be looking for the formation of a higher low over the next couple of days. We'll see what we get, especially with Trump's comments coming in later tonight. But I would look for some type of rally into a lower high and, presumably resume that downtrend. But this is a tool that I've used and kind of developed in terms of a checklist since 2022. If you guys are interested in setting it up in your own trading software, I would be happy to show you how to do that. It is free to sign up for Cryptex for the first 2 weeks, no credit card required. But if you'd like to do that, I would be more than happy to show you how to set that up on your own trading software. But with that being said, I'll pass it back to you guys. And any comments?
Well, I would agree with the timing of all that, because if we get a profit taking sell off tomorrow, which I think is a high probability event, then you're going to have after the holiday weekend, I think you'll have a lot of folks repositioning on the long side. Now, one thing you have to consider, folks, and it's under times of war, we're forced to bring these up because obviously we're in a position where we're protecting and managing our own money during a wartime condition, right? We've been reporting the events of what's happening militarily with the Strait of Hormuz, with Karg Island, and the potential for troops to wind up there. But without going too far into try to forecast what Donald Trump is going to say tonight, which is virtually impossible, we have a little sneak preview of what's happening from the State Department as Marco Rubio has been more or less talking to the world about why do we need NATO when it's all one-sided. In fact, yesterday he talked about NATO being a one-way street where we're not getting any of the benefits from allies and being able to use their airfields and airspace in a conflict such as this. But so why are we putting taxpayer dollars to defend the other countries? And that's a legitimate question. So today there was commentary from Donald Trump at basically we're at the point right now where we cannot reconsider a decision to leave NATO. And I think that's probably what's going to happen to put more pressure on the European military to go secure the Strait and secure the shipments of oil coming in and out of the Strait of Hormuz. So there's going to be a lot going on that I think could add some volatility to the markets tomorrow morning. And if it looks like Trump is saying, okay, we're going to leave you all on your own to defend the Strait and your own oil supply, what do you think is going to happen to oil tomorrow? We could see another big spike in oil as the markets make a turn lower on that news, and then only to make a recovery next week. So I think we're in the process of forming one big ABCD pattern into next week. And it's great for traders, but unfortunately, we're not trying to make money from a wartime condition. We're just trying to survive this until it's all over with. We're coming down to the 8 final minutes of this half hour. CJ, your camera's frozen like mine was. If you unplug it and plug it back, oh, there we go. That was just you. You were just not moving. There you're being a mannequin, a sticky trade mannequin today. Okay, so what I want to do, Anthony, if you could, let's bring some ticker symbols and questions from the audience, and we'll have our panel here take a look, and we might even throw the 7-point trading checklist into this. What do you have for us, Anthony?
Yeah, to start off, Ken would like for you guys to take a look at ABT.
ABT, Abbott Lab? Abbott Lab, okay. I'll start off, CJ, and then if you have a chart of this you want to throw in there, go right ahead. First and foremost, it's not really funny, but for those who are, and Anthony, your mic's open there. If you've got a position, Abbott Lab, this thing has been in free fall. And so the knife is falling. Do we try to catch a falling knife? I would say no. But the good news for anyone that's thinking about taking a position in this is that we're at a key support level or approaching a key support level here on the weekly chart as the volume is dropping, right? So that's the weekly chart. We have a super wide divergence from that moving average. Now, if we flip to the daily chart, we actually have a pivot here today as the oscillators are starting to go up. So I would say I'm gonna throw this into the 7-point trading algo here and see if we get more buy signals and sell signals. And I do believe we are going to see that for sure. All right, so we're going to go into the 7-point trading algorithm. By the way, this is a subscription. You do not have to be a member of Sticky Trade to have this. It's open to the general public. Just contact us if you want it. So all you have to do, put the ticker symbol in there, click Analyze Stock, and look at that. What did we tell you? We got 7 bullish signals and 0 sell signals. Now, looking down below, it's giving you the analysis. This is the algorithm basically taking what I've done for many years or decades and throwing it into a green light, red light type of a scenario. And then it analyzes each one of the technical signals. So as you can see here, there are no sell signals. Now, would I buy it right here? Well, we just got finished talking about how the markets could possibly sell off. So I probably wouldn't be buying it tomorrow. However, next week, I might have this one on my watch list. In fact, thank you for submitting this, because we might even have a trade possibility for next week. But that's what the algorithm is telling us, and I would agree with that. Now let's go forward.
AJ, do you mind if I point out one thing on this chart that's
Sure, go right
this
ahead.
is another thing that I love to use in terms of the CCI? Price has created a lower low, but the CCI is creating a higher low. So you're seeing that classic bullish divergence in the CCI, which is usually indicative of declining momentum to the downside. You could even go back further since the
Even back here.
Yeah, that's what I'm talking about.
Yeah, members, you hear that? Does that sound familiar? We talk about that. Now, I did not pay CJ any money to say that. We didn't bribe him or talk. We didn't even talk about this because obviously this ticker symbol just came up. But that is absolutely a positive divergence that you want to pay attention to. So again, while I wouldn't be a buyer right now, I would probably wait until next week, early next week, and then I would go in. But I will go out and make a forecast on this one. It's going to be a bold forecast, but I'm going to go so far to say this one, I have a price target of 105 on this one. So I think you got almost $3 to the upside, which doesn't look like much on the chart, but the moving average is moving down as the price is going down. So that stock is going to bump its head up against that moving average. So I would put that in there as a possible option trade, because this one, I'm not going to go too far into the options, but it does have a good selection of options. So thank you so much for that. Anthony, what's another ticker symbol here that you got for us? And then we'll get into a possible wrap. What do you got?
Stan is asking for you to take a look at PSLV.
PSLV. Okay, just so you know, I did not put this out on X, but I sold 20% of my PSLV position, which is a pretty big chunk. I normally go 5, 10, maybe 15%, but I went out on a limb and I sold 20%, right around 24 and a half. So it's already down from my sell point. But the main reason I did that was because that moving average is most likely going to act as resistance. And we filled this gap here, but left a gap below the market. So now the stock is caught between two gaps. So while I still have an upside target on that one from this two-part forecast, I think it's going to do more or less an ABCD pullback before it gets to the higher level. So I have my buy up. I'm taking a chance by telling everyone this, but I have my buy order ready to go at 23.14. So it's a standing good till cancel order that's going to take advantage of the pre-market or after hour trading. So that's where my buy order is. And I'm going to buy everything back that I sold plus a lot more with the cash available. So I have a downside target short term at 23.14 to fill that gap. Monty, would you agree with that? Because this is we're talking silver here, so a lot of emotion behind that one for sure.
Yeah, I know how passionate you are about silver, but I largely agree with you. I think that moving average above head is acting as resistance. You got waning bullish volume. I think it's more likely we see that gap fill to the downside first. But I don't hate your idea of buying back in once you do get that gap filled, because I like that upside target that you had highlighted previously. I think that has a good possibility of filling next week if we see equity markets and risk assets return to their sprinting form. So yeah, I think that gap to the downside.
This chart really reminds me of another trade insight that we had for Cryptex a couple weeks back. AJ, would you like to bring up the ticker symbol COP, COPP? This is the Sprout Copper Miners ETF. This one had some really nice upside price action. We entered this one a few weeks back, but I think it's in an extremely similar place in terms of silver. It created that gap to the upside today, which might fill now if we get volatility coming into the market. But that
Yeah,
was
I mean, I like this one. I would do a two-parter on this one. I haven't traded, but I'll do a two-part forecast on this for those that want a little sneak preview of what we do. I think you'll see a pullback to that moving average, and then you'll see the CCI start to pivot lower. But then after that moving average is reached, I think we're going to bounce right off of that and go higher in a big ABCD pattern. So here you go. Sneak preview. 35, 32 on the downside, then the pivot on the CCI, and then right back up. I'm going to round that even, get rid of those 3 cents to $39 even. So there's a trade possibility for our audience. And with that, we're going to thank each and every one of you for joining us on the live broadcast today with Matt and CJ. It's always fun. Thank you guys for participating here. And again, stay tuned for the weekly market report that goes out tomorrow mid-afternoon between 1 and 2:30. I'll play it safe in that window. So thank you, everyone. Have a good evening. We'll talk to you tomorrow. Take care.